A nonprofit audit is a thorough examination of an organization's financial records. This process ensures that the nonprofit is managing its funds responsibly and transparently. Audits are essential for maintaining public trust. They demonstrate accountability to donors, funders, and the community. By undergoing regular audits, nonprofits show their commitment to good governance and financial integrity. Think of an audit as a health checkup for your organization's finances. Just like a doctor checks your vital signs, an auditor examines your financial records to ensure everything is in order. A clean audit report provides assurance to stakeholders that your organization is managing its resources effectively and ethically. This builds confidence and encourages continued support for your mission. Nonprofits rely heavily on public trust to fulfill their missions. Donors want assurance that their contributions are being used wisely and effectively. An audit provides that assurance by independently verifying the organization's financial information. This transparency strengthens the bond between the nonprofit and its supporters. Without regular audits, nonprofits risk damaging their reputation and losing the trust of their stakeholders. Financial mismanagement, even if unintentional, can have serious consequences for an organization's credibility. Audits help mitigate this risk by providing an objective assessment of financial practices. The audit process begins with selecting an independent auditor. They issue an opinion on the financial statements. The auditor sets a timeline and scope. Next, gather and prepare financial documents. This includes bank statements and expense reports. The auditor verifies accuracy and completeness. They assess internal controls. Fieldwork includes interviews and site visits. This helps understand operations and financial practices. Findings are communicated to management and the board. The audit report summarizes findings and opinions. A clean report means no material misstatements. Significant issues and recommendations are highlighted. Preparing for an audit can seem daunting, but it doesn't have to be. By following some key best practices, nonprofits can streamline the process and ensure a smooth audit experience. One of the most important steps is to organize your financial records. This includes ensuring that all transactions are properly documented and that supporting documentation is readily available. Reconciling bank accounts regularly is another crucial aspect of audit preparation. This involves comparing the organization's bank statements to its own records to identify any discrepancies. By reconciling accounts monthly, nonprofits can catch errors early on and prevent them from becoming bigger issues during the audit. Maintaining a strong internal control environment is also essential. This involves establishing policies and procedures to safeguard assets, ensure accurate financial reporting, and comply with applicable laws and regulations. A well-designed internal control system can help prevent fraud and errors, making the audit process much smoother. Finally, communication is key throughout the audit preparation process. Regular communication between management, staff, and the auditor can help ensure that everyone is on the same page and that any questions or concerns are addressed promptly. By working collaboratively, nonprofits can create a positive and productive audit experience. While audits are essential, they can present challenges for nonprofits. Clear documentation is crucial. Establish document retention policies and train staff. Open communication prevents misunderstandings. Regular meetings and clear expectations help. Strong internal controls reduce risks. Segregate duties and conduct regular reviews. Document responsibilities and cross-train staff. Ensure continuity during staff changes. In conclusion, nonprofit audits are an essential aspect of organizational transparency and accountability. By embracing audits as an opportunity for improvement rather than a burden, nonprofits can strengthen their financial management practices and build greater trust with their stakeholders. Early preparation is key to a successful audit. By organizing financial records, reconciling accounts, and maintaining strong internal controls, Nonprofits can streamline the audit process and minimize the risk of surprises. Regular communication with the auditor is also crucial for addressing questions, clarifying expectations, and ensuring a smooth and efficient audit experience. Seeking expert guidance can be invaluable throughout the audit process. Experienced auditors can provide valuable insights, identify potential areas of concern, and offer practical recommendations for improvement. By leveraging the expertise of qualified professionals, nonprofits can navigate the complexities of audits with confidence and achieve positive outcomes. Remember, transparency and accountability are not just boxes to be checked, but fundamental principles that should guide every aspect of a nonprofit's operations. By embracing these principles and embracing the audit process, nonprofits can demonstrate their commitment to good governance, strengthen their financial health, and ultimately advance their missions more effectively. Section 6. The importance of financial statements, a clear window into your organization. Financial statements are the cornerstone of any audit. They provide a snapshot of an organization's financial health and performance. For nonprofits, these statements show how effectively resources are used to fulfill their mission. The three primary financial statements are the balance sheet, the income statement, and the statement of cash flows. Accurate financial statements build trust with donors and the public. They assure responsible financial management and effective resource use. They also help identify areas for improvement. Nonprofits should maintain accurate financial records year-round. This includes robust internal controls and regular bank reconciliations. Ensure all transactions are properly documented. This ensures financial statements accurately reflect the organization's position and performance. Section 7. The role of the auditor, an independent assessment for enhanced trust. The auditor provides an independent assessment of financial statements. They ensure accuracy and compliance with GAAP. Auditors examine records, test controls, and verify balances. Their goal is to ensure no material misstatements. Independence is crucial for objectivity. This ensures reliable assurance for stakeholders. A clean audit opinion enhances credibility and trust. Section 8. Beyond compliance, leveraging audits for organizational improvement. While audits are primarily associated with compliance and accountability, they can also serve as valuable tools for organizational improvement. The audit process can highlight areas where financial management practices can be strengthened, internal controls can be enhanced, and operational efficiency can be improved. Auditors often provide management letters to the organization's leadership, outlining their observations and recommendations for improvement. These recommendations may address areas such as internal control weaknesses, accounting policy inconsistencies, or opportunities for cost savings. By addressing these recommendations, nonprofits can strengthen their financial operations and mitigate potential risks. Furthermore, the audit process can provide valuable insights into an organization's overall performance. By analyzing financial data and trends, nonprofits can identify areas where they are excelling and areas where they may need to make adjustments. This information can inform strategic planning, program development, and resource allocation decisions. Embracing audits as an opportunity for growth and improvement can help nonprofits enhance their financial sustainability, strengthen their governance practices, and ultimately better serve their beneficiaries. By viewing audits as a collaborative process rather than a mere compliance exercise, organizations can unlock their full potential and maximize their impact. Section 9. Conclusion: embracing audits for a stronger nonprofit sector. In conclusion, nonprofit audits are an indispensable component of a healthy and accountable nonprofit sector. They provide essential oversight, enhance transparency, and foster public trust. By understanding the audit process, preparing diligently, and embracing the opportunity for improvement, nonprofits can navigate audits successfully and emerge stronger. Remember, transparency and accountability are not merely check marks on a compliance list, but fundamental values that should permeate every aspect of a nonprofit's operations. By embracing these values and viewing audits as a collaborative process, organizations can demonstrate their commitment to good governance, strengthen their financial health, and ultimately advance their missions more effectively. For more insights and practical tips on nonprofit financial management, subscribe to our newsletter and share this valuable information with your network. Together, let's build a stronger, more accountable, and impactful nonprofit sector.